I am recording this early Monday morning, long before the US market opens. If you are sleeping, wake up. The situation has escalated overnight, and what happens in the next few hours will set the tone for the entire week. Pull up your trading platform right now. I want you to look at the spread on your screen. On the left, the US overnight price is $69.60. On the right, the Shanghai price is $70.15. We are seeing a massive 55-cent arbitrage gap opening up. Normally, traders would close this gap in seconds. Buy New York, sell Shanghai, pocket the difference. That's arbitrage 101. But tonight, the gap has been sitting there for 3 hours. It's not closing, it's widening. Why? Because the arbitrage is broken. My sources at 3 different bullion desks tell me traders cannot source the physical metal in New York to ship to China. The plumbing of the financial system is clogged. China is paying $70 right now because they know something Wall Street is still pretending not to see. The paper price is fake. This is the signal. The great decoupling has begun. Here is what happened overnight while the US was sleeping. The banks saw this arbitrage gap opening up at 11:30 p.m. and they tried to kill it. It failed in 17 minutes. The industrial buyers in Asia, Samsung, the solar manufacturers, the battery plants in South Korea, they didn't panic. They treated the dip as a gift. They absorbed that selling pressure so fast that by midnight, we were back at $69.50. So instead of opening weak and broken, we are entering the New York session at the absolute highs. The shorts tried to put the fire out overnight, and they just poured gasoline on it. The fire is bigger now than it was 8 hours ago. So what happens when the COMEX floor opens in a few hours? We are sitting a 0 to 40 below $70 right at the door. Based on the Shanghai gap and the overnight volume, here are the 2 scenarios I am preparing for today. Scenario alpha, the gap up, most likely 70% probability. Because China is already paying $70, I expect New York to gap up immediately at the open to close that spread. If you're an arbitrage fund looking at a 55-cent free money opportunity, you're calling your broker at 7:45 a.m. screaming, "Buy New York now." If we break $70 in the first 10 minutes, the path to $72.50 is wide open today. That's where the next gamma wall sits. Watch the volume in the first 30 minutes. If we see 15,000 plus contracts trade and institutions are chasing, this moves fast. We could hit $72.50 by lunchtime. Scenario Bravo, the morning trap, 30% probability. The banks might try one last desperation play. They often dump paper right at 8:30 a.m. when the economic data drops to trigger a flash crash and shake you out. Do not fall for it. If you see the price drop this morning from $69.60 to $67, but Shanghai is still trading at $70, it is a fake out. It is a trap designed to steal your shares right before the real move. Here's your test. Check the volume. If that drop happens on low volume, under 8,000 contracts in the first minute, it's manipulation. It's a spring being loaded. The 67.50 wall that held us back last week, that's gone. The ceiling is now the floor. This is the bottom line as we head into the most critical trading day of the year. The arbitrage gap with China is blowing wide open. This isn't noise. This is the market screaming that physical is worth more than paper. The banks are terrified of what happens if we hit $75, because that's where the industrial FOMO truly ignites. If you own silver, physical, or miners, do not let them shake you out with volatility today. The overnight action just proved that every dip is being absorbed by industrial buyers who need the metal to keep their factories running. Let the deficit do the work. If you are still on the sidelines watching, understand this. The window is closing fast. The paper price is fighting to stay relevant, but the physical price is already moving on without it. Shanghai just voted. They're paying $70 while New York pretends it's worth $69. One of them is lying. And the arbitrage gap tells you which one? Prepare for the open. I'm going to be watching every tick from 8:20 a.m. to 9 a.m. If we see anything unusual, if that gap suddenly closes, or if we blow through $70 in the first 5 minutes, I'll have an emergency breakdown posted by noon. The great decoupling isn't coming. It's here. And it's showing up on the price screens. I'll see you on the battlefield. Subscribe and turn on notifications. If we break $72.50 today, you need to see what comes next. This is the week the market realizes the physical shortage isn't a theory anymore.